Hey there, Ken Zorovich, NFM Lending. Hope you're having an excellent start to the weekend. A lot of economic news this week. Some of it affects real estate. So let's break it all down so you understand what's going on. Let's start with inflation. It was a very interesting week for inflation because, there's all this fear that inflation is rising and the Fed needs to move interest rates to fight back inflation. And we got some favorable inflation reading on CPI and also PPI. Now, the Fed really likes the PCE inflation number, and we'll get that here towards the end of the month. But here's the reality of where we stand and why the Fed is under pressure right now. And you can kind of pick what side that you're going to be on. One side looks at it and says, Fed, raise rates because inflation's not going away. We've been above target of 2% for going on almost 5 years now. You need to do something. Raise rates, raise rates. And the other side, which is the side the Fed is taking right now, is being patient and waiting. And they want to see either some more data or they want to see how the market plays out. Because I think some of this is maybe tied to oil prices rising because of the conflict with Iran. Um, I think the reality is that even the Fed not doing anything to interest rates is doing something, as crazy as that sounds, because staying pat, what the Fed is trying to do is trying to get investors to react however they seem fit. And what that means is for years since 2008, the Fed has been very, very transparent and kind of mapping out what they were going to do when it comes to interest rates and raising or lowering them. And the market has really got very comfortable with this information. I mean, the market wants as much information as possible to bet on the future, right? And so the more information they can get from the Fed, the better off they are in their eyes. And if the Fed is kind of being coy about what they're doing, it makes them unhappy. So I can see how the Fed is going to go through some growing pains here with this transition of not giving as much data and letting the markets just react to what they want to do. Um, I do think that the idea of the Fed moving forward without raising rates right now is probably going to happen in the near future because Kevin Warsh wants to realign how they even measure inflation. And they're working on that with task force so that by the end of the year, they've got probably new data models. So I don't think they want to do anything to interest rates and they hope they can hold out until then. And these inflation readings kind of buy them some more time because they were more favorable, showed inflation coming down last month. So keep an eye on that. Now, what does this do for real estate and mortgage rates and things like that? So the markets are still worried about oil prices, and the Strait of Hormuz issue is not going away. That's going to be a thorn in our side with interest rates until there is a resolution. And you're starting to see it have an impact on consumer confidence and also retail sales, which were down pretty mightily last month. So I think there's some concern in the market over these factors. Um, but I think they could all be temporary. And I still think there's demand in real estate. The balance between inventory versus buyers is very strong, which is protecting values. And that's a good thing for homeowners. Maybe not the best thing for buyers as they want more inventory and they want prices to come down. But I also think sellers are more realistic and working more with buyers. So there is opportunity for people buying in the market. So listen, if you have any questions on this and want to discuss it further, please feel free to reach out this weekend. As always, I'd love to be in this business in 5 years. You know, someone looking to purchase or refinance, please think of me. Have a great weekend.